Right. We have the banking analyst now joining us from Angel Broking, Siddharth Purohit. Siddharth, can you first start by what do you expect out of the PSU banks, especially after the Q4 numbers and the slippage increase that we saw? Do you expect a big capital infusion to come in? Is that the next trigger that you're looking at for growth into these PSU banking names?
Post the Q4 numbers, it is quite evident that the earlier announcement of capital, support by the government is not going to be enough for the PSU banks. So it is highly likely that government should now think about raising that support amount. As earlier it was mentioned that government will infuse 25,000 crore in FY16 and equal amount in FY17. So going by the current number of slippages and the absolute amount of gross NPA that we saw, I think this should be hiked. But given the constraint that the government also has on their balance sheet, I don't think that there will be a material change in the quantum of support. Now, what another issue is that if that is not given, then overall growth also might hamper. If you observe, for this year, particularly in Q4, the credit growth for the PSU bank has been really stagnant. It is just close to 2%. So it's a catch-22 situation where you need to have capital for growth and you don't have capital. And given the current balance sheet, banks will find it very difficult to raise capital from the market, given their rating is already under stress. So I believe that government would now take initiative, and already they have mentioned that they will support to large extent and also beyond what is announced in the budget, but the quantum needs to be seen for taking further growth assessment.
Right. As you said that they're in a catch-22 situation, will the share shift to the private banking space? We have seen that happening. Will that keep continuing?
Yeah, in fact, last time in my interview on your channel, I had clearly said that the PSU banks numbers are not going to be good and they will have a lot of trouble going ahead in terms of profitability, given that a lot of slippages have been recognized and a lot more are still to be recognized. It is very clear that the AQR account has been recognized as NPA, but there are a lot more accounts which is beyond AQR, the 130 list. So if those are to be recognized and adequate provision has to be taken on that, then possibly we'll see significant rise in provisioning numbers for PSU banks. And in that case, what we believe is that, return ratios, the return on asset and return on equity of most PSU banks will remain in single digit. So in that case, when your ROE is depressed, it is very difficult for a case of re-rating. And what we believe is that, PSU banks will continue to underperform for some more time, maybe a couple of more quarters, and private banks, as we have seen, has outperformed and they will continue to do so because there is clarity of earnings, there is enough capital for the private sector banks, and they have been continuously gaining market share. Just to tell you one example, during this quarter when we saw PSU banks growing by just 2% in terms of loan book, private banks, what we observed for the 7 banks that we considered, have grown by close to 23% in terms of loan growth. So there is a clear shift in terms of market share. So I think private banks will continue to be in focus and PSU will be under pressure for some more time. So FY17 should, the entire year should go in terms of cleaning up process. Until that time, there would be underperformance. That's what we believe.
Right. Private sector banking names, especially banks like IndusInd, Yes Bank, maybe even a HDFC Bank, don't you think they're pricing in too high growth to come in already? After the Q4, we've seen a rally over there.
See, after the Q4 result, in fact, there has been a lot of a run-up in these banks. But what actually market is looking at is clarity of earnings. Look at the asset quality of those set of banks, as you said, IndusInd Bank, Yes Bank, or HDFC Bank. We have always said that these stocks. I mean, there is always a view in the market that these are expensive, but market gives it a valuation because of clarity of earnings, high capital adequacy, and despite challenging environment, you see HDFC Bank maintaining their gross NPA below 1%. Same is the case for IndusInd Bank and your Yes Bank. And I mean, that is clearly showing that they have not taken aggressive call lending to a very risky sector, like the metal and commodity sector, and that is paying up well in the medium. And one good part is that as far as capital raising is concerned, what I was telling you earlier, private banks has always been capable of raising capital at a decent rate at a higher multiples, and that is why one of the reason that you don't see dilution in their return ratios, and that is what market likes about, because valuation is a function of return on equity, and PSU banks, as long as they don't come up above 10% or maybe at least in a higher double digit ROE, we don't see that re-rating happening. But having said that, we don't expect substantial price erosion anymore. There could be some uptick given that government is taking a call of funding more to the PSU banks, and government has said they will take every steps to help cleaning up the process, I mean the entire NPA mess up. So possibly FY17 will be a wait and watch year for PSU banks, and there will not be a hurry for the investors to get into these stocks. So it will be more of a time correction rather than price correction. That's what we believe.
Right. Especially within the private sector space, Axis and ICICI, they have also recognized quite a bit of problems in their book. Plus, they have given a guidance that next year this is the watch list that they are looking at. How would you look at these two banks particularly? There, the risk is slightly higher.
Yeah, in fact, these are the two banks which have clearly come up with a figure, like Axis Bank close to 22,600 of watch list, and ICICI Bank close to 44,000 crores of watch list, and it is fair to assume that 50-60% of that will fall into NPA. So market is kind of pricing in that, but what a good part is that both the banks have largely said that they are not looking much of slippages beyond these numbers, and that is a comfort what market is having. So I mean, I think the current valuation captures in those of the risk, and once this cleaning up process is done by these two set of banks, possibly there is a lot more growth happening in FY18, and that is what is a very good factor. But one part with the PSU banks, what normally investors are worried about is that despite being despite having recognized a lot of NPA in Q3, just for an example, Bank of Baroda had clearly said they have recognized a lot of NPA, but again we saw substantial rise in slippages. So PSU banks has to really clean up the NPA and then start focusing on growth. Until that time, despite valuations turning higher for private banks, investors would be comfortable holding on to them or maybe buying on dips.
Right. Any sort of risk that you see with these banks for the new age digital banks or payment banks, mobile banks which are coming up, payment wallets, or it's still particularly too small that this can have a big impact on these names?
See, payment banks, as we saw, out of the 11 licensees, a couple of them have already surrendered. And I don't know how far that is really going to be a profitable business in the long run, because all these large banks have enough branch network to mop up deposits and deploy that in a profitable way in your lending activities. So for the bigger banks, it may not be a challenge as such, but the smaller private banks might face in terms of deposit mobilization to some extent. But for the bigger names like ICICI, Axis, or even the mid-sized names like IndusInd, I don't think that is really going to matter a lot. And I think by the time all this cleaning up process of all this private sector banks balance sheet is done, I think they will be in a much better position to focus on growth, both on the deposit and lending side. So I don't think that investors will be really worried about this payment banks as far as large private banks are concerned, and that is not really going to matter a lot in the long run.
Right, Siddharth, thank you so much for taking out time for us. Hope to see you again quite soon. On that note, actually, let's stay with the theme of the payment bank. We got you an interaction with Ravi Shankar Prasad.